Alrighty, guys. Good afternoon. Welcome back. Definitely a day before FOMC. Pretty sideways trading on the average across the market. The one big thing that we did see beyond just the market sort of trading flat like this across all indices, right? Just sort of doing nothing, slouching before a big day tomorrow with again the Fed meeting. The thing for tomorrow is the relationship between the inflation we see right now and the numbers we just saw, and then looking at the dot plot for rise in interest rates sometime in the future. Before we were averaging around 2023, sort of scattered around there. We had a couple members go to 2022. We'll see if that changes with one or two members or something tomorrow. I think more specifically than that, since that's pretty far out, we already know it's going to be sort of a 2022 data ordeal for interest rates. It just sort of, we're sort of already pushing it that way. It's really going to be the asset buying, so the 120 billion a month. I think that's really what's on the table, and the question is whether or not, if you remember from the last time we had the meeting, they we had the comments about we may next time talk about talking about it. So they haven't got to the part where they're going to talk about it yet. Let's see if they are going to talk about talking about it this time. Right, that's sort of what we're looking for. It'll be very easy to find that in the language. The market will react very accordingly. Are we pricing in asset purchases dwindling down this year? Yes, we've already sort of priced that in. That's actually what we've been doing with some of this rotation and what we've seen in the bond market, right? That's what the whole bond market move has been. That's pricing in. The economy's heating up, inflation's heating up, and picking up faster than is thought. And so that is going to cause some sort of reaction in terms of the amount we have spending. That's we're looking for those reactions. Again, we ask the same questions every time. It's going to be the same thing. It's just whether the tone changes. I do think it's going to come at the end of the by the end of this year. We will change up the amount of buying. I think the transitory idea is correct by the Fed, by the fact that these numbers are not going to be sustained. This is off of a rebound, and as I have said, my line is the economy can only reopen once. We're going to reopen, which we're sort of getting to the final stages of, right? We're getting there. And that's going to be it. And then it's going to be based off of the boom that we're having in the economy, which is a different thing. The reason why we're booming is not because of COVID, right? We're reopening because of COVID. The boom is for many other different reasons, and it's mostly due to the amount of spending, right? Which is what an inflationary sort of pressure comes from, is the amount of spending. The thing to remember, though, is with inflation, we're talking about prices rising. Why do prices rise? Because of more demand. We're having supply shortages in some areas, but it's not that supply was removed, it's that demand has overtaken it. And so that's, again, why we have inflation. It's not like we got caught off guard by the amount people want to spend or something. That's not why prices are going up, right? This is just the natural way of things when you're going through a boom sort of cycle. And the cycle is sort of, you're removing the cycle word, I guess we should say, because there's not a recessionary force on the tail end that you have to now somehow compensate for the amount of spending. We've already talked about the different ways in which the government is operating now, which is this sort of unlimited spending. We've, since 2008, when we started QE the first time, there hasn't been a time when we had to pay the price for it in some sort of way. And it doesn't work like that, right? We don't have to. Again, you can watch stupid conspiracy videos. You can go zeitgeist on how we owe the Federal Reserve money and how we'll never pay it. Like that. That's just bullshit, right? It's not like that. That's not actually how the world works. So we can keep spending money, right? That's the reality. So that's the stage we're in. We're really just looking for near-term insight into asset purchases. We'll watch the bond market carefully going into the discussion, and that'll be really it. I don't think, again, the equity market is just sort of having a chill day before. Again, I believe that prices will continue to trend through here. All-time high. We saw the pressure again today. The one angle I want to talk about is through energy. We came very bid on here again. This is not stopping, right? There's plenty of different reasons why this should stop. If you put it into, well, why growth is taking off here? Why are we still putting money here when there's more money to be made in growth? these things are sort of contrary because again, there has been take profit on value to go into growth. Look at mega caps, right? They had a very stable day today, even after a big day yesterday. Apple lost 0.5%, put 2.5% on yesterday. It's in the same spot, right? And so this holding across the line today was very good, just in terms of the day and everything else. And then in conjunction with our benchmark sector of energy, which is the best performing sector in the market, doing 2% again today. Before FOMC, which is the value side is the most direct to what we're going to hear in whether or not there's going to be a continuation, right? We've seen that in terms of bonds and the way in which they move, a lot of that money is value oriented. Again, if you want bonds, then you're trying to get a consistent sort of return. Well, that's sort of what the value idea is in equities, is dividends and big companies and blue chips that kind of just sit around and do nothing, right? But they're going to gain right now because of the money, right? So that's sort of what we saw today, is just a culmination of laziness before FOMC in the way in which people didn't really want to do much before we hear. Everyone already knows the numbers. So again, we're looking for opinions. So it's not the same as some of the other FOMC meetings where we had no data yet. We've got all the data. Doesn't matter really. We're looking for opinion. Today was sort of the day we knew that we were going to have some sideways trading, so we wanted to get active, have some fun, look for opportunities. There were a lot of opportunities through what happened with energy today in terms of how you could play with the oil companies. I was kind of complaining about it this morning that it's kind of annoying that basically every ticker that's putting a ton of points on is some sort of just random energy or oil company. You have a lot of different things you can pick from. Basically, top of the list here, you can spot about 20 different oil companies through here or energy related. But also through some of them is we have some of the newer ideas, right? With clean energy and some of the growth tickers that are, they may never be real or exist, but they put points on. GoEv, Ride, Blade. These things may never take off, but they're on the market, right? These sort of ideas took off today. And so you had a lot of opportunities there. Everything tied to EVs besides Tesla did pretty well today. Tesla, we were stopped out, finally out of that position. I do want to mention this. Every other ticker, every other mega cap, we buy on any low. I said this morning that we're not doing that on Tesla. So, for instance, this play did not continue to the upside, so that was it. And this is, when you look at Ford, they seem to be opposing. I'm going to take this over to every time. We took this trade yesterday off the low. Here we are. Pretty nice day on Ford today. Whether or not there's a real, I'm not going to use the C word and not that C word, correlation. I don't think there's a real correlation here, but in terms of just opportunity cost, it makes so much more sense to buy this through just the chart alone over Tesla. So Ford overall just doing better. And also just the way, if you think about it just from the ease of access of trading it, the price and the way the options are, it's just so much easier and it makes more sense. So I think there's a couple different things that are sort of going against that Tesla chart. Now we try to take it. It was very good trade over the weekend. Didn't end up panning out this week, but again, that's how those things work. In terms of other tickers, there was quite a bit of retail trading today, and so the amount of risk you could take is really based off of how much fun you want to have and whether or not you consider your trading playing. And so I made a ton of scalp trades that really didn't make me that much for the effort I put in, but it's still notable that there was barely any trades in which I entered it and prices came down after. I don't know if anyone saw this, but if you were just buying on any moves that basically when we left the call, that's when I started buying. So going right into lunch, we can actually look at it even as the market average. Just about everything came up from there, and so did everything on sort of the retail trading side. Really, these big names you see up here had these moves like this, Blade through here. Most of your charts look like this, not so much skewed this sharply. But you had a lot of moves like that that you could definitely take advantage of. And that was sort of again, using this understanding that where we are in all-time highs, you should have melt-up lunges, right? And so I talk about this. That carries over to everything we look at. So when we do look at some of these other tickers, we look through some of these. If we just look at this on like a 15-minute perspective, you'll see right when some of these trades are coming through. And I think it is important to note sort of understanding the way the timing works with supply and demand in the market, and how a day like today we had some expectation of just flat market average trading. We weren't going to see much, and how then you can take advantage of the charts that are actually getting some sort of momentum. Again, anything that's got retail buying, anything that's got option buying, a lot of these charts are the ones that we got after, and so the timing worked out pretty well. Uh, it's again, it's important to not use the hindsight approach, saying, well, yeah, well, I can see that it came up from lunch. It's sort of the going into it part of, we have sort of done this quite often. If we're active, we do it very much based on timing. If you look back exclusively, we would trade through the open, trade through closes. Today we used a different sort of approach because of where we are, right? And so again, it's important to see how you sort of have to, again, using the "it depends" sort of term, it does depend. In this case, we used what we know about all-time highs having no supply and resistance, and allowing a trend to happen through a melt up in lunch, because you're removing a lot of supply. You're not removing demand. The demand sort of stays the same, and so if you look, you can see these charts, the pattern that we're having on the green side. Most of these had that, and so as you're in this moment trading, and what I noticed is as I was buying through this time, what I noticed was everything was moving in the same way. And so an easy way to do this, as I've talked about this, is you put all the options into your broker, have them just on a list, right? And so you've got all the options that you're interested in buying. And what you can see with, again, the underlying there is the sort of equal ticking across the market coming up during that time. So right around noontime, you start to see that tick coming across everywhere. That's just like when we talk about patterns being sort of across sectors and across markets, and it's sort of a confirmation across multiple names. We see the same thing in terms of timing, right? When demand is not in just one ticker, but it's across multiple, that's a better confirmation of a move that's coming. And so that's when you start to put the orders on, right? That's when you're no longer getting filled on bids, right? This is when you're basically you're buying the ask almost. You're trying to split it, right? You're no longer waiting to get filled. You're going and you're trying to get a part of momentum. The big thing that comes from there is, when is this over with, right? And you never know. It could be one candle. You might get one candle and that was it, right? You may actually go no further than one little nice green candle, right? Maybe that was it. That can always be a situation that happens. Like, you're never guaranteed your price is going to continue. That's why we look for multiple. And so the biggest thing here today was, okay, when are we going to exit these positions? What I tried to do was take into consideration that the positions I'm going to make the most on are the ones I'm going to push overnight. We do have FOMC tomorrow, and it does create this kind of strange circumstance where you're probably not going to have a great open, right? And so what it's going to take is something that is not so risky, that if the underlying opens 1% lower or something, that you're going to get absolutely fucked in that position. So anything that felt like to me that if I pushed overnight, if there's any chance we open lower in the morning, that I would get absolutely destroyed, I couldn't exit that, then those were taking profit. But anything that sort of just dicked around and didn't do much, and I'm gonna give you an example here, and we joked about it, but I actually was pretty happy about pushing this overnight, AMD, because it didn't do shit today. And so this sort of position, we like semis a lot. And actually, semis had a very big sort of day overall from yesterday into today in terms of the way they took profit. We did not see the same thing as the market, which was this sort of gradual meltdown, right? That just sort of happened all day until sort of this influx melt up lunch. We saw a little bit more action, which gives to me that there's more demand and that there's actually liquidity being filled and then having to be brought on, and especially with market maker sort of areas. And so this is what I've got overnight, sort of in conjunction with the others. Again, energy is too obvious, so I'm not going to mention that. But something like this, I mentioned the 82s. I literally bought 82s that expire this week. So uh, we'll see. I am in the ring with a lot of other people, which is something that usually we try to be careful of. Is if there's a lot of people that just bought something, that's a lot of supply that could get dumped on you, and people could sell before you, and you could have a hard time exiting. I'm actually using that to the advantage that I think that the gamma move we get from the amount of quantity of calls actually leads to this appreciation that removes some of that selling that you'd see. Again, I think people would be surprised to see that their options are actually up, even though the underlying was down. For instance, today, probably anybody that's been in this position is not losing, right? All this move here hasn't done anything. These are the kind of positions that I pushed overnight, that they've been trading flat because volatility's been stable. Volatility's been low. We're having IVs under 30% on charts like this that expire this week. These are the ones that you want to push overnight because all your bet is that there's going to be more volatility tomorrow. Tomorrow's FOMC. Is there going to be more volatility tomorrow? I would say yes. There's going to be more volatility. That directly increases your premium. Again, premium is just IV. IV is the premium level. That's it. And so anything that has any sort of volatility towards FOMC, which is anything that has macroeconomic sort of consequences, or at least tied to what we've been talking about, and then anything that's in a sector that's already bullish that we've talked about that should get demand, that maybe had a lull today. So it was low today, which causes low volatility today, but then maybe it returns to a norm tomorrow or even more because of just sort of a good vibe, I guess, from FMC. I don't know if people will like what they hear, but anything that should just be bullish, and specifically with a growth angle, of course, because that's where our risk is, then those were great positions to go and push overnight. And so the active approach today maybe didn't pay as many points today, maybe paid some entertainment, had some fun, but I think in terms of when you look at profit, it's tomorrow that the profit comes through. And so we're going to look at that. I'm going to talk about it tomorrow. We'll see what volatilities look like. Maybe we'll take a little reading in the morning and see what volatilities look like and compare them to after FOMC and what happens. The one way to look at it is something that we sort of, or at least I touch upon, is the idea with earnings. And everyone knows about the IV crush idea, which is, it's, you can have whatever thoughts you want about that, whether IV gets crushed from earnings. When you go into earnings, you have that ramp up, right, of volatility. This is a little different, right? This is a lull before the volatility comes, and we know the volatility is going to come at a predetermined date. That's a different way of approaching it, right? And so this is the sort of opposite, where you do want to go into it. And it's not like you have to make a question of whether you avoid it or not. We're actually diving headfirst into it. We want to be involved with it because we're trading options. If you're trying to avoid volatility, then you're losing money. That doesn't even make sense, right? So we're going to see what this looks like tomorrow. Not specifically just AMD here, but I think it's a good example of a chart that has done nothing that could do something, right? It's the possibility that it can do something. That's the potential, right? That's the profit potential, is if it comes out of this range. And so that was mostly today. You can find plenty of chances today that look good for tomorrow. I think when we talk about what's going to make a move, it's going to be basically the same. It's going to be through mega caps. It's going to be through big names, blue chips. Yes. And so those are just givens. We don't need to really hash on those too much. Those are long-term positions everyone's a part of. I do think tomorrow will be interesting to look at Bitcoin and see the relationship with gold as well, and see whether or not there is actually some sort of, I don't know if it's tied to the dollar or somebody's finally figured out how inflation works. Excuse me. Because this is not very helpful. This is this is not giving us information, right? And so I think trying to figure out what exactly is the idea behind the valuation of the dollar with where the money supply is. And I think the Fed will talk about the dollar tomorrow in some sort of way. It's something that hasn't been talked about. I'm guessing someone will ask. I mean, somebody should ask, because this is the space in which I don't think economists actually understand. I don't understand. I don't think anyone really knows, because it's completely directed by the Fed. But they have tools in which they can change overnight repo markets, right? We've seen laws change, regulations change the repo markets. and allowing for more liquidity and then taking it away. This changes the way in which the liquidity actually works in the currency market, with the dollar being everyone's currency. It's the one thing that we can find flows in everything, yet we don't see flows. We don't see anything. We're basically in the dark. It's like having this shadow that does not mimic the actual other figures, right? When we watch money enter or exit different markets to come together, we don't see it. Show me where the bond selling is. You see these trends and things. This all opposite. None of it makes sense. This bid through the dollar was the market going bid on the equity side. These things are not lined up in some way that we understand them, and so why are people buying and selling the dollar in certain ways or with currencies, right? That's something that the Fed has to, give us some some understanding. And so that's the one area we're going to look for tomorrow, because again, it is important when that's what we buy things with is the dollar. So we'll watch that. And again, I do think there's some Bitcoin relationship and gold relationship, because at the end of the day, they have taken some sort of percentage of that place, whether it's for risk off or risk on reasons, right? Whether you're a real speculator or you're just holding. So we'll look at those. Definitely interested to see what we get tomorrow. We're probably going to be pretty active once FOMC is over. We get the conference, get some questions. We'll probably be pretty active at close. So I'll see you in the morning. Enjoy your night, afternoon, evening, wherever you are. And until then, see ya.